Hey, good morning, everyone. It's hard to believe it's been 5 months already since this all started, and with the Paycheck Protection Program. Uh, I think the last day to apply for a loan was August 8th of this month. And I just read this morning that the Senate Republicans in a proposed bill that they're working on are want to add another round of PPP loans. I'm assuming that you potentially could apply for loan number 2, but we'll wait and see what they come out with. Today with you is John Comunale is me, and I direct our Automotive Services group. And Tom Hudson is a tax supervisor. And Tom has probably spent the majority of his time since late March through now on keeping up to date on the PPP program. For more information, if you do need help, submitting your application or having it reviewed, you could refer to this slide. We have the the items that you're going to need to submit, and also available in our resource center. COVID Resource Center is a spreadsheet that will allow you to track your forgiveness. It's a very good reference center, and as I said, everyone will get these slides to have access to it. Looks like we lost the slides again, Tom.
Yeah, I'm bringing it back up. It just said can't share the content, just randomly.
Never had that happen before.
Me either. All right, let's go. So, good morning, everyone. First thing we're going to start off with is where are we right now, and what in the world is going on with the PPP. So, everyone's received their loans and is currently spending down their funds, or they've already done so. But what is going on with the program? John made reference to rumblings coming out of Congress, and to be frank, there's a lot of conversation surrounding the program still, which is unfortunate considering where a lot of people are in the forgiveness process. First of all, if you haven't heard, there's been plenty of talk regarding an automatic forgiveness for many of the smaller loans. Now, this may not apply to many of the auto dealerships on the call today, but for those who are on the call who maybe have a loan less than $150,000, you could potentially not have to be submitting a detailed application. I could see you submitting something like something more simple, like a signed promise that you've used the funds appropriately. That's been a common theme through a lot of the like the loan application process initially. You're making guarantees and promises that you're going to use the funds appropriately, which gives them, I feel like, the legal ground to stand on in the event that you don't.
Participant is now joining.
And then you also have, you've got Congress, though. They failed to make any movements on it thus far. Secretary Mnuchin has come out and said, look, I support this. I support loans under $150,000 being automatically forgiven. But I think this was all supposed to be coming out of the recent stimulus bill talks that Congress was unable to agree on. They've since gone on recess, but I know they're back, working their way back right now into DC, I believe is the current event, to work on legislation related to the Postal Service. So I think we can all agree that expectations for Congress are quite low right now, and we're going to have to pay attention to what they're doing here in the short term. As an aside, there may not have been any progress on whether or not Congress is going to overrule the IRS's determination that any of the expenses incurred that are eventually tied to forgiveness will be forgiven either. So there's been no rumblings about that, but we're reliant on Congress, and everyone knows how that goes. Do note that automatic forgiveness for smaller loans, it does make a lot of sense. It turns out that the facts are 86% of the PPP loans that were approved were for amounts less than $150,000. but those loans in total only account for about 26% of the total funds. So high number of loans, low number of dollars. Banks have expressed that this is going to cost them a lot of money to process all of the applications for a lot of these smaller loans, based on the time and effort they have to put into it versus the percentage fee that they receive that's built into the program. And I know all of us rarely ever feel bad for a lot of these big banks, but I think in their defense, they didn't mean to play such a big role in this process, at least not voluntarily. So focusing on the high dollar loans, it kind of just makes more sense logically. And I think that's what Congress and Secretary Mnuchin are trying to get done, get this program over and done with, and we can all move on. And I think we're just going to have to wait and see. In general, though, there's so much uncertainty regarding this program right now, and I think it's worrying a lot of the banks, and I know it's worrying a lot of you out there with your applications saying, hey, I want to get this done with, I need to do this, I want to make sure I do it right. But it's a big moving target, and I think a lack of any clarity out of Congress from these past few weeks, it's going to cause some of these banks to really delay accepting their applications, etc. As you see here, I listed on the slide some of the big banks, what they said they're doing right now. Wells Fargo said, we're waiting on more guidance. We don't want to do this yet. JP Morgan Chase, they were actually the largest in terms of number. They processed the largest number of PPP loans and, of course, are managing those day to day. But they said we're looking late August, early September. Truist Bank and PNC Bank kind of came out and said the same thing. We're talking later this month. And I don't know if any of you work with these banks, you may be getting internal communications from them saying, hey, we're working on it. But I think the banks are a little wary of what the program is right now and approving any of these applications. So before we really get into our presentation today, let's just consider what might be the best thing to do right now. In our opinion, it might just be get organized and wait. We're not going to put a time on how long you should wait. I think right now, at least these next 1 to 2 weeks, especially with Congress kind of making moves down in DC, our best recommendation might just be to use up your funds, focus on using them correctly, and maybe getting organized by preparing all of the supporting schedules, the documentation that you're going to need for the forgiveness application, and then wait for more clarity from the banks to solidify their processes. There's no rush to really be applying for this forgiveness as soon as possible. I understand the sentiment. You want to get it done. Let's end it. I'm done with this. I'm tired of talking about it, and I'm tired of worrying about it. But there's plenty of time in that you don't have to make any loan payments on the actual loan until 10 months from the end of your covered period. So they give you a little bit of a window. And I think with the clarity that we've been speaking of and the banks setting their processes up and this kind of stumbling along a little clumsily, it might just be best to wait. But granted, that's coming from CPAs. We're stereotypically more risk averse and conservative. So if you feel comfortable going and applying now and being first, that's completely fine too. I get it. In most circumstances where you have a very simple loan, is very clear, cut and dry, that may make a lot of sense. And if you do it, I definitely want to hear how the experience was so we can see how some of these start playing out. But I get it, but I think waiting a few weeks might just be beneficial, at least right now. So as you guys know, I'm sure some of you guys are probably coming back for repeat presentations because we're doing such a great job for all of you, right? But if you're new with us, we've been giving a bunch of presentations ever since the program came out and talking about how this program works. And we've been learning with everyone else as the guidance has been slowly trickling out, and we're trying to stay on top of the subject so that we can help everyone. But there's been a few updates since our last round of presentations. First, back in the beginning of July, the program was extended through August 8th. For anyone who'd still not applied for a PPP loan, there's still some funds left when the original clock that they had set in the bill was expiring. So they extended that for an extra week to take care of any stragglers who may have still needed a loan. Back in July 24th, the SBA came out and they said, look, we're finally going to be accepting forgiveness applications from the banks on August 10th. And as I mentioned previously, a lot of the big banks have not opened their portals to their clients yet, but the SBA said we will accept them as soon as the banks feel like they're ready to send them as of August 10th. I know some smaller banks have been able to open their processes as far as I know, and have been submitting forgiveness applications. Further, there's been a few new FAQs that came out on various topics. August 4th was a big day in that we'll go into that one in the next slides to cover some of the major pieces that came out of that FAQ, because that one was important. But also on August 12th, they added a few clarifying questions they have a much larger FAQ, which has over 51, 52 questions, I believe, at this point. And they covered things that hopefully won't be necessary, maybe some one-off type situations, but it has to go into the appeals related process for PPP loans. So if part of your loan was not forgiven for whatever reason, they have outlined a process for you to argue that it should have been forgiven, and they've established an appeals process that you can follow to go through, and all the details are in there. I hope it's not necessary for anyone. It shouldn't be, but it's there if you need it. And then there's also some guidance released on how the EIDL and the PPP interact with each other. If you are in a position where you receive both of those, they can start to interact in an odd way, but as I said, this is kind of a unique case, and it covers the weird circumstances where perhaps you had a very small PPP loan, perhaps not anybody in this audience, but if your PPP loan was quite small, but then you received an EIDL that wasn't a greater amount than the PPP loan, they tell you what to do. Shouldn't be necessary for most, but it's there again if you need it. And then lastly, they issued guidance on the PPP and the EIDL, which we just covered. So jumping into the more important one here on August 4th, here's some of the highlights. First, on August 4th, they reiterated that who they want to use the 3508 EZ form. That's the shorter version, the easier version of the forgiveness application. It's form 3508. That's the number. If you're employed, if you're self-employed and you don't have any employees, then they want you to use this short form, and they don't want to see a long form from you that when you submit for your forgiveness. It saves time. It cuts down on the work that the SBA has to do on their end. So they're doing what they can to convey this message to everyone. I think they added this to the FAQ just to reiterate, send us the short, easy form if you meet these certain requirements. We cover some of those later, but they're highlighting on self-employed individuals, use the easy form, please. Next, the FAQ provided information on how loan recipients can begin making payments and how that'll work in the event that your loan is not entirely forgiven. Proportionately forgiven, the whole thing's forgiven. Of course, you don't have to make any payments. That includes interest payments, but it explains that interest will be accrued on the loan portions that are not forgiven from the date of the loan's disbursement. So that's when they're starting to count the interest from and calculate the interest from. And to be clear, if your entire loan is forgiven, you do not have to make any interest payments. But that's clarified in this FAQ, and they explain how to do it. Next, the SBA, they finally confirmed something that we've been saying for the past few months, but with a caveat. We always included a caveat from ourselves saying this is our interpretation. It may not be true, but they finally come out and said this is true. They said Tom and John from CBM had it right, and that is that any costs incurred before your covered period but paid within the covered period will qualify for forgiveness. So the example we always mentioned was having a payroll cycle that ended on, say, June 4th, but then you received your PPP loan on June 10th, and then you cut the check for that pay cycle that ended on the 4th on the 11th, which is in your covered period. Was that included as an eligible payroll expense, the entire amount? It was unclear. We thought it was. SBA finally came out and said, yes, it is. So that kind of makes that point a little less important, since they've added the 24 weeks and frankly ample time for everyone to utilize all of their funds. But it's just another way that the government is helping everyone get through this program and obtain full forgiveness. Last, the SBA, they came out and said you can't be accelerating your costs in order to fit them into the covered period. They're talking specifically, what they mentioned were retirement benefits. And they don't want anyone saying, well, we know we're going to have to pay everyone's retirement plan contributions through the end of the year, which may have been outside of your covered period. They don't want you prepaying that right now in order to squeeze it into the covered period. Again, this shouldn't be an issue based on the mathematics of the program and the loan amount and the 24-week extended covered period. But they're just laying a set of ground rules that they're trying to enforce, and they're just giving everyone a heads up on things not to do. Also, coming out of that FAQ, there was some clarifications on owner compensation and how that limit works. Previously, we had been showing this chart, which we have here on the slide, that shows which costs are eligible for forgiveness based on different entity types. And all of these, as an owner, you're subject to different caps than employees of companies. Those caps are listed below. 8 weeks, you're at 15,385 as an owner. And then for 24 weeks, they didn't triple it like they did for the employees. They set the cap at 20,833. And this is important because this FAQ came out and said, if you have retirement costs and health insurance costs that are paid on your behalf as any type of the employees, they said which ones can be included as a forgiveness, included in forgiveness as an eligible cost. And you'll see there for S Corp employees, that includes their retirement contribution. And for C Corp owner employees, that includes both their health insurance and their retirement. But they came out and said this doesn't factor into that cap of that 2833. And what they want you to do is they want you to separately report on the application. What you will be doing is for everybody's retirement benefits and everybody's health insurance, they get reported separately on the application. They've instructed you to take the owner portion and include it here with the employee portion. Previously, that we were thinking it could have been subject to the whole cash compensation cap for the owners, but that turned out to be false. So in a sense, owners kind of get more bang for their buck now in that they can pay themselves up to the caps that we cited on the previous page, and then also include the costs of their health insurance and retirement for C Corp owners, and then S Corp owners, it's only their retirement. If you're a self-employed Schedule C, your mechanism is very different. General partners in a partnership, also very different. Those forgiveness and those caps are based on a kind of mechanical formula. So this does not exactly pertain to you as much, and especially since you can't include your costs for health insurance and retirement as a general partner, because they say that comes out of your net employment from self-earnings. That's their interpretation. Unfortunately, that's the way it's going to be. We received some questions in advance that we want to address here right off the bat. And we thank everyone for sending these in. It's always great to see good questions, and we want to make these a priority. So let's hop into them. First one, what do we need to do if employees either left for another job or retired while the program was in progress? Let's answer that part first. If anyone left during the covered period who's included in all the calculations in the loan amount, all the look back periods, they are an exception. Anybody who was fired for cause, anybody who left for a different job, they are an FTE exception. They get accounted for in the application kind of manually, but you don't get penalized, okay? Second part of the question, do we need to replace them or can we eliminate the position without penalty? You can eliminate them. It may be more beneficial to replace them if you can, because it'll help you spend down those funds. That's acceptable as well. But just know that you don't get penalized in the event of kind of normal career turnover, such as people leaving for a new job or retiring. Next question. What kind of proof do we need to submit in order to have a loan forgiven? This person said, it's just my husband and I, and we use the loan for payroll. So as I kind of mentioned on the previous slide, this highly depends on your entity type. If you guys are a partnership, or if you maybe perhaps a Schedule C, the mechanism for you guys to obtain forgiveness is somewhat different. It's kind of automatic. But if you guys have an S Corp, it is of course going to be paid to you guys on your W-2. Any type of regular pay, you're going to have to make sure it falls in that covered period. I don't have enough details to answer this question thoroughly, but in terms of proof, it's just going to have to be bank statements, pay statements, 941s that you file quarterly, and they actually list out all of the different documentation pieces that you need specific to your situation on the application. So I do recommend checking there for a complete list of what they'll be accepting. And they don't want all the information submitted. Some of it they want you to just have in the event that they come looking at your loan more closely. But just be aware, it's different depending on your entity type, how this will work. And I have a feeling that you're probably falling into the partnership realm, which is quite automatic. And you technically don't have to move the money anywhere. So wish I had more details, but that's the general gist. I hope I answered it. Next question, does CBM have a worksheet, revised, updated, to calculate and help fill out the forgiveness application? Yes, we do, and it's great. I've been using it to work on some of these forgiveness applications. It keeps the information organized. It helps populate the schedule appropriately. We formulated it so that if you go through and follow the steps that are outlined in there, you put in all the information for each of your employees, their hours, their pay. It'll start populating the correct areas of the application, and it kind of paints a picture of how this should look based on all of the input data. And you can use that as support for when you eventually apply through your bank and their specific portal or their access. It's a good way to get all the numbers organized. You can go right to our website in our COVID Resource Center, and that Excel spreadsheet is available for download. It's quite complex. So if you have any questions, you can go ahead and reach out to myself or John, and I'll try to give you an answer on how to appropriately use that. But we have one. It's highly beneficial. It'll help you get organized on your end, and I can't recommend it enough. Next question, number 4. Is it confirmed that you can end your covered period anytime before 8 and 24 weeks, meaning you do not have to wait until the 24-week period is up and submit for forgiveness at, say, 16 weeks using the figures for the 16-week period? This is a great question, very common question. We get it a lot, and the answer is yes. You can apply before the end of your covered period. What is important to know is that your FTE measurements are now going to be based on the date of the application. But if you choose a shorter period than 24 weeks, granted on the application you're either checking 8 weeks or 24 weeks, you're going to be checking 24, but you may be submitting at 16 once you've utilized all of the funds. You make a guarantee that you will not decrease anyone's salary beyond 25% throughout the end of the program. I don't know how SBA is going to enforce that or check back on it. It could be you're just also playing the odds of getting your loan evaluated by the SBA, which is also something to be seen. But you are promising to not cut the pay of anyone beyond that 25%. So at a high level, the pay reduction is still in effect, but the FTE reduction is as of the count when you submit for forgiveness. So theoretically, if you needed to, after you apply for forgiveness, you could cut positions, but you cannot cut people's pay, at least until the 24 weeks is over. Hope that's very clear. Next, how do you calculate commission salespeople and service techs pay to determine if any of them had a 25% decrease? That's the salary reduction threshold, the 25%. Example, salesperson had a big quarter back in the beginning of the year, I'm assuming you're referencing, because first quarter is the measure, the look back period for the salary reduction. And then they got lazy in the second quarter, but was employed the entire time. Are you penalized because he sold no cars? Okay, so this is complex because the point of the program was to pay people. In theory, you can obtain complete loan forgiveness if you never opened your doors and just kept paying everybody their same exact rate. No salary reductions, no reduction in hours, just kept giving everyone the same amount of money. That's how the program was designed. So in theory, this salesperson should have been compensated at the levels using the PPP loan funds at the amount that they were performing in the first quarter. So I don't have all of the details related to this question, but it sounds like there could potentially be some impacts and perhaps a decrease. It depends on how the numbers play out. If their compensation in the covered period, which included the second quarter, was significantly less than their compensation through the first period. I understand that auto dealerships, the compensation is very dependent on performance, but the program doesn't necessarily account for that, and it's maybe a larger issue of having one large program trying to apply to so many different types of businesses. But the fact is that person should have been compensated at the same levels in the look back period in order to prevent any type of reduction. So you're going to have to tread carefully there.
Hey, Tom, for salespeople, if I would definitely, at a minimum, include their guaranteed amount for the calculation.
Yeah, I mean, that's definitely a good idea. Remember, you've got a lot of time in the covered period to make up any lost ground. So if somebody was paid perhaps smaller amounts in the beginning of the covered period and is looking at a reduction, you could start amping those amounts up throughout the rest of the covered period to kind of gain that ground back, because this is based on averages throughout the covered period. So all hope is not lost. And then do remember that you have the safe harbors that you can rely on in the event that, hey, I messed up during my covered period, I cut people, and I may have done this, or maybe business just demanded that you do so. There's still an opportunity to get back to your original levels back in that are focused or compared to the beginning of this year, the first quarter pre-pandemic, where you can get out scot-free without penalty. And those are the safe harbor rules that are in effect for both FTE reductions and salary reductions. So that's where you're going to want to look in the event that you may be suffering a reduction. More time is essentially given to you in that event. So, all right. Somebody asked a question about this, and it's something we wanted to cover because most people are falling into this situation. Think about the loan that you received. It was for 2.5 months of payroll. Originally, when the program was designed, they said, we're going to fit that into 8 weeks. That was hard. That was really hard to do. And now with the 24 weeks, it's made it a lot easier. But 24 weeks was pretty gracious from Congress. They tripled it when essentially most people are going to be able to utilize their funds at the 10, 12, 16 week time frame and utilize all of those funds. So that's when the SBA came out and issued an IFR, which is their interim final rule, which is how they are applying guidance to this program. And they said, you can apply early. You can apply before the end of your covered period. But as I stated before, that means the FTE reduction is now based on the application date. And I understand that's a moving target within a few days, so you're going to have to work with your bank on that. But FTEs are based on the date you apply for forgiveness, but the salary reduction is still for the full 24-week period. That means no cutting salaries once you get through the application process. Even once your loan forgiveness application is entirely approved and your full amount is forgiven, if you're still in that 24-week covered period, you can't go cutting salaries yet. I don't know what type of timeline you're going to be looking at for getting this through the banks, through the SBA, and getting a full word through. So you're going to have to be careful with that. But high level, you don't want to be cutting salaries at all if you can prevent it. And that has to tie with applying early. So that's something you're going to have to be cognizant of when you're applying before the end of the 24-week covered period. Alternatively, if you want to keep everyone at staffing levels and pay levels all the way through the 24-week covered period and then apply, that's completely fine too. But as we've stated before, we know the sentiment out there. People want to get this done, over with, apply, end this thing, and continue on with their lives. So that is available for anyone who wants to do so. Just be aware of the restraints. We made reference to the easy form earlier in the presentation, and we were saying how the FAQ that came out from the SBA, they said, we want you to use this easy form if you're self-employed especially. So here are the criteria for the easy form. It may not apply to a lot of the dealerships that we have here unless you didn't have any restrictions at all. So in order to use this easy form, you need to be self-employed, you need to be a contractor, sole proprietor. Those are people who probably have relatively lower loan amounts. They're trying to make this easy, hence easy form. If you did not have any salary or FTE reductions, you can use the easy form. This is going to essentially be,
Unknown participant is now exiting.
Here's our loan that we received, and we used it all appropriately. We didn't cut hours, we didn't cut salaries, so I don't have to demonstrate on the form at least that there isn't a reduction. You're going to have to at least do the math on your end and have it all saved in the event that your application does get looked at. I highly recommend that. But if you don't have reductions, you can use the easy form. And then also there's a third one. You didn't have reductions, but you were unable to return to levels of businesses as measured before February 15th. And that has to do with a newer exception that came out of the SBA that said if there are local, federal, any type of restrictions that said you're not allowed to open your business, then that's an exception for a lot of businesses that you can rely on to not incur any types of reductions. But they're just saying if you just didn't open your doors, but you paid everybody using the funds appropriately and kept everyone's salary as such, you can still use this easy form. Everyone else, you have to go to the long form. I feel like it's not that much longer because you're kind of still doing this exercise. It would be a good idea to still do all of this math, regardless of which form you're using, just to ensure that your numbers are all up to snuff. But detailed instructions available for both of them. You can pull those off the SBA website. I hope the banks include the instructions inside all of their portals and are really helping everyone step through this. But in the event that it's not there or you're stumped, you can always reach out to us and we'll give you all the answers that we can try to give you. And of course, we'll work with you on completing your application if that's something you choose to. We covered that in the beginning of our presentation, and that link is inside the slides if that's something you're interested in. So let's just talk high level here, filling out the application. I don't want to get into all the details. I wish I could with everyone, but the fact is everyone's circumstances are going to be different. Everyone is going to be using something of their own on their end to track this. It depends on a lot of things. Maybe your payroll provider. I know ADP has these pretty reports that you can pull out of the system that helps you track all of the per person costs, hours, and they pull out all the information that you're going to be needing to submit the application in a pretty good looking form that is kind of a real shortcut. So if you have a payroll provider like that, definitely go into how you run your payroll, speak to your rep, look in to see if they have this. For folks who may not have that and handle payroll in a different way, and a report may not be available, there's a ton of different Excel sheets out there. AICPA has one, which is our association of CPAs. We have one on our website that keeps it organized and we think is the best approach to work through this. And then you may just have your own system on your end where you're like, I think I've got this. I'm going to, just kind of start doing it my way because I know our systems and how they work. And that's perfectly acceptable too. So at a high level, I just want to talk about, all right, what do we need to do on the application and how do we break this down? And let's look at it a little bit closer. So at a high level, the first place you're going to go before beginning the application, they send you right to the back where all the schedules are, and that's the PPP Schedule A worksheet. It's going to have a box that's similar to the one on the screen that you see there. And of course, this is in all the Excel sheets, the ones that we provided. It's also there in one form or another. And you're going to be breaking your employees into two distinct groups. You're going to have any employee who made less than $100,000 annualized for all pay periods in 2019, and then employees who made more than $100,000 annualized for any pay period in 2019. Okay, so I was trying to stress some of the important terms here. Originally, everyone thought, or at least it appeared, that we're going to have people who A, made less than $100,000 in 2019, and then B, made more than $100,000 in 2019, and that's how you separate this. The truth is, when you read into the instructions and look at it closely, it says, I have it underlined on the screen, $100,000 for all pay periods in 2019. So we had one client who we were working with, and they said, look, I have an employee who they make $50,000 a year, but they did excellent job in 2019, and I really wanted to reward them for their performance. So I gave this person a $10,000 bonus in one specific pay period, all at once. And what that does is annualized for that pay period is puts that employee into, if you look at every single pay cycle that this employee has, in one of them, their annualized salary, the one that includes that large bonus, is over $100,000. This means that now they need to go into this chart for anyone who made an annualized $100,000 throughout 2019. So that's good and bad. It's just, it's neither here nor there. That just means that they aren't subject to the salary reduction now, because that salary reduction only applies to employees who made annualized per pay period under $100,000 per year. But it's just something to be aware of, and we wanted to bring attention to make sure everybody falls into the correct category. It's something that doesn't make sense logically, but that's what the rules are, and that's what it says to do. Annualized per pay period. You're going to have to focus on that. And I know that might be difficult to pull out and locate, but I apologize. It's just something you're going to have to do. Next.
Michael Barron.
Is now exiting.
All right. And then so we have next, we have the other table. You'll notice the difference between the two of them. It doesn't have the salary reduction portion of the chart on the rightermost column. So this is just another representation, and this is for anybody who made over $100,000 for any pay period in 2019. They're going to go into a separate chart. So as you start into the application, one of the first things you're going to do is figure out who goes in which chart and which bucket based on those 2019 compensation amounts. And then you fill out the charts appropriately. All right, you're going to be focusing on their cash compensation during the covered period. And then you're going to also have to look at their FTE measurement and figure out what their value is, which is something we've covered in the past, but that's based on average hours worked per week during the covered period divided by 40. Something also that we wanted to point out is the compensation to the owners. They are separate. They're not in either of these tables. You're not supposed to be putting them in there. It's kind of one lump box, and it's line 9 on the long form application. And we just wanted to cite it here and show, look, that's where the owners go. You're going to put their cash compensation. And as we demonstrated earlier, any retirement benefits or any health insurance payments, at least for C Corp shareholders, will go in the other lines where you're reporting all of those payments for your employees, and then you're just going to tack on the owner's portion if applicable. But owners, their salary gets reported on a separate line, not in either of those two charts that we just showed. Those are for employees only, and that's, of course, if you have employees. We had a question come in, and I'm just going to address that real quick. Someone asked, if we had no salary reduction for non-furloughed employees, would we qualify for forgiveness? Okay, so I'm hearing that they're furloughed, which means that they probably were not being paid and then paid their normal hours per week, which, of course, logically equates to a salary reduction. All right, there's an important point that I want to make here. If you cut someone's hours, if say you took them down from 40 hours to 30 hours, there's going to be a proportional decrease in pay. Obviously, they're making 25% less because they worked 25% less hours. That is not a salary reduction. The SBA has come out and said any commensurate reduction in salary associated with any FTE reduction is not a salary reduction, and they're looking at anything additional. So if you took an employee, cut them down from 40 hours to 30 hours, you're looking at a potential FTE reduction if that stays the case throughout the entire covered period. And there's math that's associated with calculating that penalty. But that person is not included in any pay reduction penalty because their pay wasn't actually decreased. It's just their hours, and thus their total pay was decreased. So I know that's hard to conceptualize, but think of it this way. The only way you could have a reduction for both an FTE and salary for this specific example would be to cut someone's hours from 40 to 30, but then also cut their hourly rate from 20 to 10. So there's math involved with bifurcating those two reductions and figuring out the difference and the amount of loan that wouldn't be forgiven related to that employee. So if you have a salary reduction beyond anything tied to a decrease in pay that was associated with an hours paid reduction, then you're going to be looking at a double reduction, and you could have a portion of your loan not forgiven. So I hope I answered that question. Very good question and a very important point for everyone to take away. Filling out the application, back to this. We wanted to talk about the safe harbor exceptions. We had a question about this earlier, and we wanted to go into them again because this is where a lot of the, questions are arising, because we understand how this was moving. And I know auto dealerships have different types of employees where you have folks who are driving vehicles dealer to dealer, and their fluctuation in hours and pay is really based on their demand. And unfortunately, the program doesn't account for a lot of those types of employees. But there are exceptions, and maybe you can make an argument for some of these, but you cannot be penalized for a reduction in someone's hours paid in these specific circumstances that I have listed here on the screen. So that's positions that were somebody turned down a good faith offer to come back to the business. So if you're your business shut down, or folks went on unemployment, and you finally got everything running and you said you can bring back employees, and you wrote and you said everyone, hey, I need you back, I want you to come back, but they said no, I'm not coming back. You're supposed to document this as best as you can, the emails, the HR paperwork, or anything that you have that can demonstrate this, and you will not be penalized as a company for this employee not coming back, because theoretically they would cause issues in your FTE reduction, because they're looking back to the prior periods, they're obviously not working or getting paid for the amount that they were comparatively. So you're not penalized for this. There's also a number of employees who fired for cause. Look, if someone did something wrong and you had to fire them for cause, I don't think the federal government wanted everyone having to retain these people just because of this program. So that is also an exception. And then if there's anybody who said, I need less hours, or I'm moving on to another position with another company, you don't get penalized for that either. Those people would qualify for an exception, and thus no reduction for FTE reduction. It would be beneficial to replace that person. Remember, some of these are tied to, it's more numbers based, not exactly positions based, which is hard because these are kind of, the way this is all presented, it seems contradictory, but it would help you spend down the funds better if you could replace that person. I know that's not always possible, I'm just bringing it up. Next, you can, you need to mark exceptions if the employee, as I said, was not filled by a new employee. So if you replace them, got someone new, you only utilize this exception in the event that you couldn't fill the position. And you'll see this when working through the charts and the tables that we were showing before, how this works. If you have any questions, again, reach out to us, because I think we're pretty intimate with how to fill these out and the associated charts, and we can help you present this accurately. Lastly, one of the biggest ones was, and this one was after the fact and kind of an addition, they said, the SBA said, look, if your business was shut down due to federal, state, local regulations, said you're not allowed to open, I'm preventing it, I'm not letting it happen, you don't get penalized for that. There's different mechanisms to account for this, but if that is you, and you fell under those circumstances, then just know that you shouldn't be penalized, and there's ways to portray on your application that that happened to you. It's going to include presenting all of the guidance that you were provided from your local organizations and the authority that they exerted upon you. So you're going to have to save that for documentation purposes, but just know it's not against you, and they wanted to be aware of that and make sure you didn't get penalized for that. All right, something else in the application that we wanted everyone to know about. Something that's kind of, it doesn't make sense logically, but this is how you fill it out. Line 1, line 2, line 3, line 4, you're going to be submitting all of the different types of payments that you made. Line 1 is all of your payroll costs that you incurred during the covered period. So just think of timing in terms of how many employees use up their associated PPP funds before others based on pay rates, all of these different moving numbers. Everyone is going to slowly use up their allotted portion, for lack of a better term, of the funds at a different rate. So in this box, you could potentially have, in some situations, payroll costs that exceed the total amount of your loan. So if your PPP loan was for $2 million, but you incurred payroll costs throughout the covered period of, say, $2.5 million, you're going to be listing on the application $2.5 million, which is backwards, because why are you telling them you spent $2.5 million of the $2 million loan that you received? It gets accounted for later in the presentation, later in the application. And I have it here on the next slide. So what it's going to do as you move further down, it tells you to take down and put in line 11, which is the total amount of forgiveness that you qualify for, the lesser of line 8, line 9, and line 10. And line 8 is the modified total, which will include all of the payroll costs that you had up above. So in theory, this would be higher than your PPP loan amount. And this is where you select the lower of the figures, and you select, of course, probably the PPP loan amount in most circumstances. And then there's also one line there following line 10, which accounts for if you didn't spend at least 60% of the funds on payroll costs, then of course you have a reduced amount that's eligible for forgiveness. So that one will be lesser than the PPP loan amount in that event. Most of the time, you're going to be putting line 9. So I just wanted everyone to be aware of that, because when you're working through the application, it starts to look odd. It starts to look weird. You're like, why? I spent $3 million during this period of a $2 million loan. It just doesn't make sense theoretically, but just know that it gets accounted for later in the application, and this is completely normal, and that's how it's designed. We just have a few more questions here at the end that we wanted to address. We weren't sure if we would get to them, and of course, if anyone has any further questions, please submit them in the chat. I look at these presentations as a good opportunity for us to communicate with everyone out there who's working through these loans and to focus on the different parts that they are struggling with. It's you guys who bring out, the real issues working through some of this stuff. And it's very apparent that this is, as I said previously, one large solution to a very diverse set of businesses and set of problems for each individual business owner. We've got a question here coming in from somebody, and I've seen this one before. Someone said, I believe your worksheet asks for weekly payroll amounts and our store pays bi-weekly. Is there a way to accommodate for that? So what you're going to have to do is, unfortunately, this program is based on a lot of those weekly amounts. The spreadsheet, especially when you start counting covered periods, 8 weeks, 24 weeks, it's much easier to break it down into weekly periods. So maybe if you're doing bi-weekly, divide everything by 2. I know that can be somewhat frustrating, but I think that's the best way to work yourself through the spreadsheets, at least ours. And I've seen a lot of other ones do that as well, but it really helps at a high level to aggregate all of that pay information into those weeks, and the weeks that we're focused on, it's so deeply integrated into this presentation. So I understand your comment, and it would be much easier if we could just report it all bi-weekly. But trust me, if you get it down to weekly numbers, it's going to be much smoother of a process, in my opinion. So that's a great question. And unfortunately, just one of those grumpy things with this program that just causes you to, want to hit your head on the wall sometimes. All right, since I don't see any more rolling in, I'm just going to hop through some of these real quick, just so that we can get this information out. Somebody said, my loan was based on 2019 numbers. However, a lot of the people that were let go at year end, is the head count still based on the February 15th, 2020 numbers? So this one is kind of talking about all the look back periods. When you do your FTE reduction, there's multiple windows that you're going to be looking back to. One of them includes 2019, and then there's also there's a series of steps that takes you through other windows. Eventually it gets to February 15th, 2020. So when you applied for your loan amount, you said, here's all my employees in 2019. I understand how that picture may be different when you're filling out the application now, or you're working through the covered period now here in 2020. So outside of any exceptions, people who left maybe before the covered period started, but were included in the loan calculation amount, you can kind of get relief through looking at other periods such as February 15th. So you're going to have to look at FTE counts through all of the different windows that they mention in the application for you to use. And you're going to have to work through that math, and you should be safe based on how this program was designed. But of course, I don't know all of the details or necessarily exactly the timing of everything, but if someone left who's included in the count in 2019 but left early 2020, they should be accounted for in these windows, and you should be okay. Next question. Someone's looking for insights, direction on completing the PPP forgiveness application and what to expect as far as pushback from the SBA and banks. I like this question a lot because we're going to give you the real story on how this is working. The banks, they're responsible for approving these loan applications. They are going to be the ones communicating with you, of course, receiving your application and working with you to make sure that they're right. What they are going to do is then send this information on to the SBA that says this client is approved for full forgiveness. And then the SBA does their due diligence on top of them and makes sure that everything looks okay from a higher level. So the banks have a vested interest in making sure your application is right, because their fees, which is a proportion of the total loan amount, depend on a successful loan application. Not successful in that it all gets forgiven, just accurate. So the banks are going to be working pretty hard to make sure that they're not sending anything incorrect up to the SBA. I'm not sure what type of relationships all of them have to maintain with the SBA. I can't speak to that, but I just know that the banks are relying on an accurate representation. So are they going to be tough on coming back to you? I don't really know if that's possible, considering a lot of the uncertainty. But if you have documented all of your costs and tried the best you can to stay within the guidelines, I think you should be safe. But that's the only type of pushback that I am anticipating. coming from a lot of the banks. So those are my thoughts. This last question here, and then we're going to wrap this up. Somebody was asking if we let people go in the 24 weeks covered period, but have the head count up to the original level as of December 31st, do we pass the safe harbor test? Okay, very simple. Yes, based on the information in this discussion. If you were just, for some reason, you had to let people go during that covered period and you were doing your best, but at the end, when you do the math, you're coming out, it's looking like you have a bunch of reductions. So now you have two possible dates by which you can get your employees back to a certain level. December 31st, it's not a snapshot date, it's the last date. So if you had a reduction, you have until the end of the year to get all of your employees back to the levels that they were according to basically February 15th and the other look back periods, and get their salaries back to associated levels that they were previously. But that's the last possible date. So in the event that you have it done by Thanksgiving or sometime in the middle of November, you're allowed to submit your application earlier than December 31st and say, look, I've got everyone back now. I should meet the safe harbor. That's exactly how this is going to work. You say, look, I didn't have everyone through the covered period, but I've got them back now. That qualifies you for entire full forgiveness via that safe harbor. So December 31st, I want to make it very clear, that's the drop dead date. That's the last possible date to do this. But if you do it any time earlier, you can go ahead and apply using the date of your application, and that's from when all of the FTE and salary reduction measurements will occur, or if it's after the end of your covered period, it'll be from the date of your covered period. So quite complicated, but just know that December 31st is the last possible date if you are in fact looking at a potential reduction due to just being unable to operate at regular levels during your covered period here in 2020. All right. So that wraps up what we wanted to go through today. I hope we answered a lot of your questions. There's so many different areas that we could dive into with this program and spend hours and hours talking about it. It's hard to work through a lot of these different spreadsheets, and we've been talking to people we're working with and other practitioners about where the issues are arising, and it's frankly related to I've mentioned it multiple times. It's one large solution to a lot of different problems. So there's going to be quirks. There's going to be unanswered questions. I think that ties into maybe we wait just a little bit to see what's happening coming out of Congress, because they could wow everybody and maybe come up with a higher number that's forgiven based on whatever their tolerance is or however Congress decides they want to do it. And you may not actually need a loan application. I know for a lot of our auto dealerships, you're talking much significantly larger loan amounts. So I don't think that may be a reasonable assumption for you to count on automatic forgiveness, and you will be submitting an application. But those are just my thoughts. You never know what they're going to do down there in Congress. So just something we wanted to highlight as part of getting all this information out to everyone. We want you to know that we have a bunch of different events. This one today was focused more on auto dealerships and the specific problems that they have, but really the application is quite industry agnostic in that it really applies, and a lot of these rules do apply regardless of whatever type of industry you're working in. There are a few other quips, but really there isn't anything that makes it separate. But this one was today for mostly that was our target audience. Of course, anyone else is welcome to discuss the PPP with us in any of these events. So if one of them works better for your calendar, go ahead and sign up. But things like we have a not-for-profit one coming up next, and that one is very different, I would say, in terms of things that you have to do on your end in the books. And I know that Pat Drolet and Judy Barnhart, they'll be presenting in that one, and they'll be covering a lot of those different not-for-profit related segments and things that you'll need to know for that industry. So if that's something that would pertain to you or anyone you may know, please have them sign up. That one's on Thursday, August 20th. So coming up here soon. And then we have one next week on Tuesday, and this one will be focused on emerging businesses. And those are mostly smaller businesses who may have to deal with lower loan amounts, and then different types of entity structures that may have different rules, as I harped on earlier, based on the type of entity that you are. So mostly lower loan amounts, maybe more self-employed individuals who maybe just work for themselves or have 1, 2, 3, 4, 5 employees, something like that. And then also coming from a different angle, we're having A lot of our financial planners come in and drop the knowledge that they have. And this one should be a good one. I know I'm going to join in to get some tips, but it's about growing your net worth, and it focused on financial planning for early stage career professionals. So if you know anyone who might benefit from that, go ahead and, of course, sign up. And then we have our CAS group doing a presentation as well for the remote workforce. And a lot of good information coming out of CBM. We want everyone to join it up for these. There's, of course, no cost, and we're just trying to spread information as best we can and help everyone as best we can through what's going on right now. So it's all there. And we also have a lot of resources for everyone, as we cited on our website in the COVID Resource Center. And of course, we will be assisting folks who request assistance with their PPP loan applications. You can sign up on our website, and we'd love to help you out with that if that's something you feel is necessary. If anyone has any last minute questions, we're going to wrap it up right here. But I'm Tom Hudson, and this is John Comunale, and we hope we could help you out. And John, anything to say?
No, just thanks everyone for sitting in. And
all right, thanks guys
for sharing your knowledge.
Yeah, everyone have a good day, and reach out if you need us. We're here to help. Okay. Good luck.